Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull-bear point and figure market breadth summary chart for February 17th, 2019. Market breadth. With this past week's market advance, our bull-bear point and figure ratio at 1.64 rose from 1.38 last week. The total count of securities in bullish or bearish patterns increased 3% to 3,206. The count of bearish stocks decreased 7%, while the count of stocks in bullish patterns increased 11%. The Pirls P&F Market Breadth Summary Chart shows us a market now 6 weeks in bullish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, rose 183 points for the 12th advance in 23 weeks. At a positive 565.31 points, it has risen above the January 2018 and June 2018 tops, and continues below the one remaining top above plus 100 in the last 30 months. And it continues above all 5 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in accumulation mode with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 4 accumulation days and 1 distribution day. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in neither accumulation nor distribution mode on lower average daily volume. Momentum. At Monday, 114 close, the CCI 20 daily had 6 days above zero, forming a Woody's uptrend, now at a positive 114.79, up from a positive 73.13 last week. The CCI 20 daily continues outside the plus or minus 50 range and will need to fall back into that range in order to form a zero-line reject long entry point. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 13 weeks ago, while the daily CCI 20 began a Woody's uptrend 4 weeks ago. The CCI 20 weekly, in a Woody's downtrend, rose to a positive 69.46 from a positive 31.08 last week. It is now outside the plus or minus 50 range required for a valid zero-line reject short entry signal. Industry rotation the last 2 weeks. All of the top 5 industries are positive, and 4 of the bottom 5 are negative. Summary: some tech on the top, gold and silver, oil, and oil services on the bottom. Bullish, networkers, and semis have entered the top 5. Gold and silver has left the top 5 and entered the bottom 5. KBW Bank and S&P Retail have left the bottom 5. Bearish, disk drives, and comp tech have left the top 5. Focus this week from www.caseyresearch.com. Doug Casey on money, how to get it and keep it. The following are some key points. In this classic piece, Doug explains the 4 main steps for building and maintaining wealth, no matter what happens in the market. What would you do if some act of God or of government, a catastrophic lawsuit, or a really serious misjudgment took you back to square one. As far as I'm concerned, the Greater Depression is looming, not just another cyclical downturn. I think a good plan would be to approach the problem in 4 steps. Liquidate, consolidate, create, and speculate. Step 1. Liquidate. Chances are high that you have too much stuff. Your garage, basement, and attic are so full of possessions that you may be renting a storage unit for the overflow. That stuff is costing you money in storage fees, in depreciation, and in the weight of psychological baggage. It's limiting your options. It's weighing you down. Get rid of it. Right now, it has a market value. Step 2. Consolidate. Take stock of your assets. After step 1, that should be a lot easier because you'll have less junk but a lot more cash. You'll already feel more in control and empowered, and definitely richer. But your main assets aren't money or things. It's the knowledge, skills, and connections you possess. Take stock of them. What do you know? What can you do? Whom do you know? Make lists and think about these things with an eye to maximizing their value. Step 3. Create. Remember, the essence of becoming wealthy is to produce more than you consume and save the difference. But it's hard to maximize value working for somebody else. And when you're given a job, it can be taken away for any number of reasons. There is cause and there is effect. You don't want to be the effect of somebody else's cause. You want to be the cause for everything in your life. That implies working for yourself. At least turn your present employer into a partner or an associate. Step 4. Speculate. You've got money. Now you have to keep it and make it grow, because staying in the same place amounts to going backward. That's partially because the world at large will continue getting wealthier, even as the dollars you own lose value. Most people will try to outrun inflation by trading or gambling. The markets, which are the natural friend of productive people, will perversely prove very destructive to them in the years to come. You'll know when the final bottom in the stock market has come. The average guy won't want to hear about the stock market if he even remembers it exists. And if he does, he'll want it abolished. What to do if you're already wealthy? First, recognize that wealth is a high moral good. Don't feel guilty about having it or about wanting more. I'm a fan of some aspects of George Gurdjieff, the late 19th to mid-20th century Russian mystic, who was also a merchant adventurer at some points in his colorful life. He said that anyone who successfully employed at least 20 other people must be considered at least partially enlightened and a type of guru. That viewpoint always resonated with me. Self-made wealthy people may not be saints, mystics, intellectuals, or even especially thoughtful or moral. But they've proven they're better than the average bear in at least one important way. They can create and conserve wealth, and they've thereby eased everyone's path to further accomplishments. Second, figure out your purpose in having money. It would be tragic if anyone frittered away his wealth thinking he wouldn't live very long, and then succumbed to a self-fulfilling prophecy, not because of medical difficulties, but because of financial difficulties. Third, don't give your money to charity. Entirely apart from showing a lack of both imagination and foresight, it's a complete waste of good money, pure and simple. Contrary to popular opinion, it rarely does any good. It often does great harm. The whole concept of charitable giving is corrupt and desperately in need of a complete rethinking. Fourth, if you do care about posterity, who knows, you might be reincarnated, and on the chance you don't make it to the singularity, carefully consider how to dispose of your estate. At a minimum, consider that memes are far more important than genes. It's wiser, therefore, to leave your wealth only to individuals, related to you or not, who will carry forth values you hold dear and are worthy of the wealth. If nothing else, make sure you disinherit the government. Also, consider that dividing wealth dissipates it and generally makes it less useful. If you have $1 million, you could leave $1,000 to 1,000 people. Bottom line, if you want serious money, you have to get serious about money. You need to understand these fundamentals and never forget them. Don't let all the garbage reported in the financial media you read, see, or hear confuse you about what money really is. Don't consume more than you make. Save. Don't spend. Invest. Regards, Doug Casey, founder, Casey Research. All wise words. Thank you for watching this week's Santu Pirls Stock Market Commentary video featuring the proprietary Bull Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl, www.s2pmarketsignal.com. For Santu Pirls Stock Market Commentary, I'm Cynthia Pearl, hoping that you have been enjoying a peaceful and pleasant weekend, that you experience a happy President's Day tomorrow, and that you're looking forward to a prosperous and productive week coming up.